Well, lots to talk about with our next guest as well. Trideep Bhattacharya is joining in. He's, of course, CIO at Edelweiss. So we will get to Trideep. I think, yeah, we have him with us. Yes, so we do. Trideep, great to have you on. Thanks for joining in. I was just taking a look at some of the, portfolio holdings. Mangalam and Nigel were telling us about some of your, big holdings, both on large cap and the mid cap fund. Banks definitely make it to your top list, right? And the big boys, HDFC Bank, ICICI Bank. So I want to ask you this, that incrementally from here on, are you still expecting big moves in banking? Because banks have flattened out in 2023 after a stellar 2022. Would you expect bigger gains in the rest of the year?
I think overall banks are probably one of the sectors where on valuations are in our favor. While in other cases, valuations are at average. In certain stocks, in the case of some of them that you named, the valuations are still lower than about 5-10 year average. So valuation case is in our favor, number one. Number two, in many ways, fundamentally, they are in a very sweet spot. So they've gone through an NPA cycle, the balance sheet is clean. There is credit growth that is happening in the economy, and them will benefit from that. But that probably people know. What we will see over the next year or so is basically as some of these provisions reverse and some of a good amount of profitability or lower provisions leading to earnings growth, which will probably stack up quite well when you compare with other sectors which are there or thereabouts. So I'm very confident that on relative basis, banks will for sure do quite well over the next year or so. In absolute terms, we have to see where the stocks really trade versus their valuations and take a call accordingly. But you are absolutely right. We are positive on lending financials, if I may call it that way, across our multiple portfolios that we do so, because we think we are at that stage of the economic cycle where credit growth is picking up, loan loss provisions are at low, and fortunately, we don't have some of the excesses like what we see in some of the other geographies.
All right. Hi, Trideep. Good afternoon. Trideep, I wanted to ask you, banks, they expected to outperform. The street is betting on that. But IT, the street is split on that. So I want your view. But before that, let's hear out what the Cyan management had to say earlier today. Remember, those numbers were quite good. And now they're talking about achieving that revenue run rate of $1 billion by the fourth quarter of this year. We'll hear him out and we'll come back to Trideep.
We've taken into account some degree of macro uncertainty, which we all can't escape. But taking into account some degree of macro uncertainty, we're still quite confident that we have a run rate towards that number essentially in Q4 of this financial year. There is still a lot of work to do, but we believe, will we be there? Surely thereabouts, but we're working hard towards getting there. So that's still a line of sight. There are some obvious risks in areas like semiconductors where there is a slowdown that is anticipated. But I would say, I think now we have a well-diversified portfolio. If you look at the 4 reporting sectors that we have, which is transportation, sustainability, connectivity, and new growth areas, they're all very balanced. I mean, they're all, a fourth each of the services business. Or if you add the manufacturing business, that's also about the same scale. So these 5 pillars that we have, I think are working out very well. And let's face it, right? There were times when some of the sectors that we were in did not perform very well compared to the others in the market. And I'm referring to the aerospace sector here particularly. But now that sector has come back quite strongly. So I think we've positioned ourselves quite well.
Well, Trideep, Cyan management says they have positioned themselves quite well. What about you? How have you positioned yourself? I'm looking at your portfolio. You have Infosys, you have Persistent in there as well as a couple of those IT names, among others. But your view on the IT pack right now, and also last couple of days, Mastech delivered a good set, your Cyan did deliver a good set, but the larger names disappointed. So how are you positioning yourself on IT on the whole, and within that, between large and mid caps?
Yeah. So I think it's a great question overall. So we actually went underweight IT around about beginning of last year. And that has worked out over a period of time quite well for us. What has happened is that over a period of time, over the last 3-6 months, we have covered our underweight. And at the moment, we would be probably marginally underweight, stroke neutral in our portfolios. The reason why we are not overweight is, now, of course, it's out in public that we always thought that this result season, the earnings estimates need to get calibrated for FY24 versus how may actually turn out to be. And Infosys did that. We saw TCS also talk about the same. That is being done, or that has been done so already, and the stocks have taken one knock down. Now, beyond that, it's basically how the individual companies are positioned with regards to discretionary spend in the United States, banking and financial services sector, and also the exposure to US. So the companies which are relatively low indexed in these areas are the ones which selectively would do better than others in the context of the sector, given that the macro growth rates have been set by the biggies. So that's why some of the individual mid caps or small caps, as they reported and as they will report, you will see these nuances play out over the rest of the result season in the context of IT. So sector-wide, we are probably neutral. Stock specifics would do the talking from here with regards to IT in the very short term. But somewhere in the next 1 or 2 quarters, we think that the sector will probably bottom out, and it will be good to add even to on a broad-based basis and probably go overweight at some point in future, subject to evaluation.
Right. From IT, we move to ITC, the big index heavyweight among your top holdings. Done extremely well for you all. Just wanted to know what's the runway you foresee for this one in the consumer space. And the second one is Reliance. Again, a big overweight for you all, the second largest in your large cap fund. Reporting numbers today, what is it that you'd like to see in your numbers, in the numbers, for you to continue to hold, your conviction here?
So ITC has been a meaningful long-term overweight for us across portfolios. And we've always thought that in the context of the consumption sector, which is reeling under the pressure of inflation, this is one spot where, historically we have kind of put our bets on, and that has worked out well for us in the past. We think that overall, the cigarette side of the consumption would probably see good amount of volume growth overall, and that will and that has helped us. Of course, going forward, we will see how that space pans out, but that continues to be a meaningful bet on us. With regards to Reliance, while the absolute weight is on the higher side, but I think on a relative basis versus that of benchmark, we would probably be underweight. We think that the earnings would probably be middle of the road, where, while we can't talk stock specific numbers here, we think that overall it will be just about versus that of expectations there and thereabout. I think what we would look to here would certainly be the progress on the retail side and on the new initiatives, what they plan to do, which will probably be more valuation trigger. On the renewable side would be the areas that we would kind of look to understand, apart from the core business, which I think broadly people anticipate.
All right. Trideep, just request you to hold on to that thought. The Hindustan Zinc numbers are flashing for you in the screen. As we know, the holding between the Government of India, Vedanta, as well as LIC is nearly 97%, so very limited float in the market. But just to analyze those numbers, top line is more or less in line. The margin is a little bit better, and that's because the zinc cost of production without royalty, that's come down by close to around 6% on a sequential basis. So you're bracing for a bit of cooling off, and I think 5 to around 6% was the expectation. So it's cooled off by that much. That's why the margins are a little bit better than that. But more importantly, we know mostly what's happened in the past quarter. You want to know what's the view from here on. And they've given their guidance numbers as well. And they're factoring in a mild growth on the mine metal production. If you look at it, they're estimating that between around, 175 to around 101,000 odd, which is a little bit higher than what they've done in the past year. But the good news is they're expecting the zinc cost of production to come down. So just to give you a number, in the last quarter, that's in quarter 4, it's at around $1,214 per ton. Now they're estimating in the coming year, it'll fall by at least $40 to around $100. So the band they've given of cost of production is around $1,125 to around $1,175 per ton. So that's the cost factor that's playing out. But we'll have to wait for the management commentary, what's happening with regard to the divestment, what's happening with regard to their plans on the international zinc business as well. Not a big mover on numbers where there's no float in the market, but just thought we'll analyze that. On the margin, a little bit better, but nothing really to take home with regard to this.
But good to have that perspective on the numbers, and on the slide, you can call it maybe side beat on the margins and the EBITDA front. Market, by the way, is back in the green. So Nifty has managed to claw its way back on the other side. Some of the gainers, ITC, TCS, HCL Tech is positive now, 1.2% higher on HCL Tech as well. Infosys is up, so there's some buying, incremental buying on IT and on a few consumer stocks as well. That's the story. Actually, even Wipro is higher, HCL Tech. Most of the IT big names are on the upside. Well, we do have to take a break, and we would also thank Trideep on that note. Trideep, great to have you on the show as always. We look forward to our next conversation. You have a good weekend. Well, we get into, thank you very much. We get into that break.